Yeah, I mean, my point of view on battery as an asset, I have to say it's quite exciting to be in this sector, because after years of solar, I really got bored. And thank God storage happened, because I was gonna just change the industry, because I couldn't stand finding another solar subsidized project, race to the bottom. It is exciting because we finally have to start using our brains again. I mean, with what you have done in the last 5 years, there is a lot of value, a lot of knowledge into it. And this is what we have to do to make investors comfortable, introduce new technology next to solar and storage, introduce IoT, introduce AI, modeling, algorithm, all things that if you were a solar investor you never heard of, you never seen before.
Let's just look at kind of your experiences within the market so far. What are the opportunities that are existing, that are routes to market today? And that could be from the beginning of development, or it could be in terms of optimization of existing assets.
So I'm happy to start on this one. I think there's a really simple message, which is that sort of through what we've seen from solar, and it echoes of what we saw fit in our row, which was investors very much looking to that as being the route to market, or the route to being able to be financed. That has now gone. But what we are looking at today is a world in which you can go and invest for your I&C enterprise. You can then go and invest solar to go on the rooftop or go adjacent to that. And if you then look at the IRRs that are associated with that, you have a very good payback on those systems. Now that depends on your contracting. So if you're an energy intensive industry, then I'm afraid that's not such a good proposition for you, because you've already got a great deal, so well done. But if you are just looking, if you are say 2 to 5 megawatts and you haven't got solar on your site, you really should be looking at that. Now, why am I talking about that? Well, it's because one of the things we do is we look at both solar and storage. So we work out how to get both the best IRR from your solar, but also if you were to put storage onto that and shift your excess solar from that middle portion of the day to offsetting your 4 to 7, whether it's CMSC or whether it's red band or whether it's a wholesale contract where you're able to get a day ahead linked contract. Being able to then shift your excess solar from that middle of the day period to then offset your 4 to 7 is an incredibly valuable process. And what we're seeing today is IRRs between 10 and 15% for reasonably large projects with a huge amount of your peak consumption being offset. So my message would be that if you're a large consumer out there and you haven't considered solar, have a look at it. I think you'd be sort of foolish not to. Now that's right at the bottom of the market, so maybe a few people might offer use a slightly bigger systems.
Sure, I think from our point of view, it's more about the merchant risk. So it's the merchant risk that we've been discussing. It's particularly with regards to comfort around merchant risk. I think the point that Roberto and Mark made around the fact that, like maybe we have become a little bit lazy on merchant risk. Everyone's seen the subsidies there. But the fact is that with these energy storage assets, and particularly the value that sits within the fast response, and what you can do with these assets comparable to any other asset out there, I mean, the value that sits in the very, very short term is very, very high. And from our point of view, yes, there's a risk on the merchant side, but if you're willing to get comfortable with that risk, and I think the market is more and more growing to become comfortable with that risk, then the potential value that an energy storage asset offers in those markets is absolutely massive. And I think and I know it's going to be mentioned throughout the day as the 9th of August, and I think that potentially, if we take a look at sort of the intermittency of the grid, the fact that, there's going to be this requirement for these fast responding assets and it's about extracting the greatest amount of value that sits within these assets at the point in time where they're required. If the investor can be comfortable with that, and I think they are becoming more and more, and I'm particularly interested in Mark's comment with regards to the fact that debt is now potentially becoming interested on the merchant side, then there's a huge growth and there's a massive potential for the energy storage assets and achieving a considerably higher return on investment.
Yeah, just jump in quickly. My point of view, and as I said, we focus on behind the meter, but what is interesting these days is the funding structures are getting very interesting now to create a bankable storage slash generation model. I'm really happy to hear from Mark that finally debt is coming, becoming comfortable with funding storage opportunities. And I come from that as well because I spent a long time in my career at Royal Bank of Scotland doing solar and wind. Believe it or not, 15, 16 years ago, when the first solar deal came on my desk, everyone was scared. The bank would not finance it. It's like, technology risk. It's kind of plug and play, you know. Fast forward 10, 15 years, now you have institutional investor taking solar off your hands at like 5%. So my view is that the project finance sector is working hard, I think, in creating structures on the equity side and on the debt side to make sure that these deals become bankable, because when finally, banks start putting money into it, when institutional investors start pouring billions into the industry, it will become easier for the grid as well, because there will be so much flexibility on the grid that we'll be able to manage the transition from centralized, carbonized to decentralized.
I've got one of my own, Roberto. Thank you. I'll come at it from a slightly different point of view, just to add some colour in terms of anecdotally the deals that I've seen in the marketplace and that we've done. Some of it's driven by developers, which is great because there are customers out there who don't want to understand energy storage, who don't want to take risk, but do want some of the benefits that it can bring, especially if you've got co-located assets and other generation. And then I've got end user customers who do see it as a fantastic opportunity to drive some additional revenue streams or savings, and are prepared to understand the technology and the risk, and actually take genuine risk in the assets. It isn't one size fits all, and I don't think it ever should be. From a bank's perspective or a debt perspective, either of those models work for us, because at the end of the day, it's still understanding similar kind of risk profiles, and that's only got to be good in terms of uptake. So all of those sort of things will start to make it of more interest to decision makers, CFOs, those kind of guys who ultimately are looking at the numbers. Clearly, if you can monetize them, it's brilliant, but not all the time can it be monetized. But as I say, the projects that happened, in my experience, were the ones that had all of the elements that Roberto referred to there.
Earlier on, you referred to the complexity of structuring storage versus solar or other power sector deals. I think some of that complexity comes because of the and correct me if I'm wrong, the very versatility of storage. Now, I think that's something that, obviously we're here at Solar and Storage Live, the instant appeal is that you want to store your solar and use it for as many hours as you can and be as renewable as possible. However, as we heard from Ed, the immediate opportunity and actually the immediate decarbonisation opportunity as well, a lot of that comes from reducing the peak, which is the most extreme end of the spectrum, and these guys can tell you way more detail than I could. But just in terms of that, and then the other buzzword, if you will, is flexibility. So it's not just storage to store and time shift, because that doesn't always come with an associated strong economic case. Now, basically what I'm saying in short is there's plenty of other things that are valued by the system already, such as ancillary services, and others less so, that we anticipate will become more valued by the system. So I don't know if maybe left to right or right to left, you guys want to talk us through some of those aspects of what energy storage systems can do and are doing in some markets that perhaps people with the best of them in the world, coming from a conventional power sector or even from a solar background, might not necessarily associate, coming from a longer-term contracting sort of deals and things like that.
I'd like to sort of start off just by maybe putting out a little bit of a framework in terms of how I like to think about energy storage, and I think it's quite helpful for the industry as a whole, right? So it's sort of, this is where a chart would be great, but you're going to have to bear with some arms being some axes, right? So you've got sort of duration up here. So this goes from, say, like a 1 hour at the bottom up to sort of a 60 hour right at the top. And then sort of cycles per year, you start off at sort of 1, 10, 100, 1,000, 10,000, 100,000. And in the middle, you've kind of got a big block here, which is lithium ion. So lithium ion takes that block, that works very nicely. So 1 cycle a day, all year round. Down towards the far end up here, so 100,000 cycles a year, you might have your flywheels or your supercapacitors. Up here, in your sort of longer duration stuff, you've kind of got your power to X, right? And then in here, so from a flow perspective, you're looking at, say, 1 to 3 cycles per day, but you can also do, say, 2 to 4 hours. So it's a little bit of a bespoke application for the services that are out there today, but it certainly holds its own in terms of that chart. Now, the reason why I talk about that is because when you then take the grid services or the wholesale trading that exists today, you can map that to the same chart. So if you're looking for a sort of wholesale trading type approach, you're looking somewhere in here. You're looking towards a sort of 1 to 2 hour duration, ideally with sort of 1 to 2 cycles per day. So that's somewhere around the sort of lithium ion zone, but also we're looking to try and build flow into that as well. In terms of FFR, you really don't need to cycle that much. So you're looking at, say, 1 to 1.5 cycles per day. One of the things that's really exciting for me is something called frequency containment, and that's something for me that's quite exciting for flow. So we're able to do heavy utilization in either direction as much as you want. So if that service comes onto that chart and is something that the National Grid are looking to do, and that's been announced through SNAP, so we don't know exactly what it will look like yet, but certainly something that the flow is very sort of key to see in the market, and something we actually think, if we go back to some of the frequency events we've seen recently, perhaps a service like that might have been very, very helpful.
From KiWi's point of view, when we're thinking about the markets and the various different markets out there, it's about understanding how we can monetize the asset across the various different markets. And in doing that, it's not just taking a look at the various different revenues and saying, there's the most money over there. It's about understanding actually how the asset is going to react and what the cost of providing that service is to the asset. So basically, are you going to degrade the asset more by providing a balancing service or alternatively a frequency service? And what we've done is we've built up over 1 billion data points. So basically, we've taken the time to understand these assets over the last 5 years. We really want to understand, okay, you know what, I've got all of these different markets that are available to me. What's actually the value that sits within them, both from a revenue point of view, but also from a cost point of view. Understanding how these different markets out there degrade. And from that point of view, it allows us to then, when we're assessing the value and where we can see the greatest opportunity for the return for the final consumer, that allows us to then pick the best market for the asset without and giving a fair assessment as to the value of that market comparably, rather than just saying, the most revenue sits over here, so we'll put the asset over here. In addition to that, you've got the short-term nature of these various different markets. So the short-term nature means that we can swap in and out of the different markets very, very quickly. So we're in the position to be able to say we don't have to commit and say, we're locking in value to this one particular market for 20 years because that's where it is today. The case is, as we're seeing the markets become shorter and shorter in duration, we can say, the value sits in this market here today, but where does it sit tomorrow? Where does it sit the day after that? What's the value of that to the asset? How's it going to degrade the asset? What's the greatest value that I can achieve from that asset? And then extracting that from an investor's point of view, we can then give a greater confidence that not only are we going to get the greatest value out of it, we're going to get the greatest longevity out of the asset.
Yeah, I mean, my point of view on battery as an asset, I have to say it's quite exciting to be in this sector, because after years of solar, I really got bored. And thank God storage happened, because I was gonna just change the industry, because I couldn't stand funding another solar subsidized project, race to the bottom. It is exciting because we finally have to start using our brains again. I mean, with what you have done in the last 5 years, there is a lot of value, a lot of knowledge into it. And this is what we have to do to make investors comfortable, introduce new technology next to solar and storage, introduce IoT, introduce AI, modeling, algorithm, all things that if you were a solar investor you never heard of, you never seen before. Going back to the point that Andy was making about the visibility of cash flow. On one side you have solar that pretty much you know how much money you're going to make in the next 20 years plus or minus 5%. Hence why these things are going now at 5% IRR in the market. But there's not much you can do with a solar plant. The only thing you can do is sell electricity. That's it. One way when you produce it. Or you can turn it off. Yeah, or you can turn it off. Well, good. Especially if you put a lot of money into it, turning off your asset is not what we want. But with a battery, yes, you do have uncertainty of cash flow because we saw the revenue stream 3 years ago is completely different from the revenue stream today. Where we get some comfort as investor is that because of the flexible nature of the asset, we know we can do a lot with the battery. Import, export, quick, slow. Of course, there are flow versus lithium ion and so on and so forth. But there is a lot you can do. And with the help of KiWi, actually, we can look at the future and understand what kind of revenues we can access in the future. The important thing is that when you build a battery project, you make it as future-proof as possible. You make it as flexible as possible because today, FFR may be, well, it's not even the main revenue creating anymore, but for example, 2 years ago, 3 years ago, EFR was the main revenue generating, but today it's not, it doesn't exist anymore. So how do you build a project that is future-proof? You have to look out 5, 10 years and make sure that you can access revenues, different revenues that we don't even know what they are today possible.
Thanks Roberto. I'm not quite as upset about solar as you are, but nearly there. Still got the scars from trying to convince bank credit committees that the sun will come up in the morning. But yeah, coming back to the flexibility piece, I think for us in terms of getting our head as debt providers around merchant risk, it's great to hear that there is flexibility and that there are other things there and we're not relying just on one revenue stream. And it is dynamic and it will change and that's the stuff, if we can get our head around it, we understand the technology and what it can do and that there is undoubtedly a need for this, especially if it's co-located as well because it does improve the economics. Then that's what allows us as debt providers to lend and know that we're going to get our money back, which is ultimately what we're about. It may well be that we have to take some risk in that, and it may well be that there is an element of uncertainty. But the good news is that we know that there is going to be a revenue stream there for a period of time, probably beyond our lending term, and that's the kind of stuff that we can get comfortable with.
Just want to pick up on Roberto's point with regards to the market evolving. We spend a lot of time, as you can imagine, studying this, and there's one particular day that is of great interest, which was the 12th of March, when the wind was really picking up, and we saw a drop and the bootstrap, which connects Scotland to Wales, dropped off. And so what we saw was a massive increase within the balancing mechanism. There was about 42 gigawatts of actions. Now, we like to take this day and say, you know what, actually, as the coal units come off, as potentially we see less CCGT, as we see less flexibility sitting on the grid, this is going to become a more and more typical type day. So from that point of view, you're going to have more and more intermittent renewable generation sitting there. And as these days become more typical, then the national grid is going to need a more flexible, fast responding asset. So from a point of believing the story, yes, there's merchant risk there. But fundamentally, if we look at how the grid's going to evolve, what's the world going to look like? Then it has to look like a world that has energy storage sitting in it. And it has to be a world with fast responding flexibility.
Let's throw the audience a bit of a bone here. Let's just briefly, Roberto, not completely turned away from solar entirely.
Here to take it, no don't worry.
But let's, okay, so...
No, but don't get me wrong.
No.
I don't hate solar. I love solar.
Right.
Let's just evolve
You don't want to see the
solar
planet
with
burn.
storage.
Yeah, sure. So, well, let's just take a moment here if we can, and if it's not too much of a digression from what you guys are wanting to talk about, what can storage do for solar? And not just solar, but what's really exciting for me about covering energy storage, frankly, there's only so much you can talk about batteries in a box, and obviously there's different kinds of batteries. You guys just want to give us a view on how all of these different things intersect, because the need for like joined up conversations around this stuff is something that, you know, we hear every single show. Obviously each one of us have our own little area of interest, our own little niches. Do you want to just talk to us a little bit about, and I hate this word, holistically, how we can start to basically how we can start to join these things up together, and what these technologies can do for each other, and essentially what we can do for each other as well, I guess.
Firstly, Roberto's defence, we are an energy storage theatre, so I think he's a perfectly legitimate comments there. It's a safe space. With regards to behind the meter revenue streams, we were actually discussing this earlier before Andy cut us off and told us to have this conversation in front of you rather than in the corner. And it's about that fact that, you know, so from a merchant risk point of view, you know, we've been spending a lot of time sort of talking about sort of this merchant risk market, but behind the meter and that opportunity that gives you that certainty of revenue streams is that, you know, you've got that cost avoidance in there. And from KiWi's point of view, you know, so we've got 10 years experience in managing those various different cost avoidance. We know these costs better than probably anyone out there, and we're in a position to be able to say, okay, you know what, you've got your triads, long may they continue, your use of system charges, all the, you know, the various different sort of environmental sort of green savings, etc., etc. You know, how can you best utilise the asset? And if we're talking a battery, you know, like if you've got a short duration, so if you've got a 1 hour, you know, up to potentially 2 hours, you know, what's the best time to be able to run this asset? How can I basically put this asset into the market and basically reduce the various different costs that are out there? And I think from KiWi's point of view, you know, like using that background, using that experience that we have in those markets, and being able to pick those times, I think we're in the best possible position to sort of make those savings for customers.
So it's the question, you know, what does storage do for solar?
Yeah, I mean, and essentially in combination with the other clean technologies, but, you know, we're at the just kind of a sop to the people offended by Roberto's outspokenness.
You take a site, you look at it, and you go, right, what is the correct size of solar to put onto this site for the right IRR? So you say, okay, today that is a 1 megawatt peak solar installation. Okay, fine. Pass it to Roberto, he'll have a yawn, and then sign it off, tick, you know. But essentially, where can we go to from here, right? So, and I take Roberto's point absolutely, in terms of now you're looking for things that are 5, 10, 15 years. You're looking for something that's ready for the next change. So what can you do with that 1 megawatt peak? Well, what you can do is you can say, right, instead of 1 megawatt peak, I'll look to oversize it. I'll maybe look for a 2 megawatt peak, and I'll also look to put storage on side. So what then happens is you take that excess that would have been exported to the grid, and then you can use that to offset your peak consumption. What happens in a world in the UK when you have a lot of behind-the-meter sites or a lot of solar sites all producing in the middle of the day? I think you're going to start to see really high peak pricing both in the morning and in the evening. So what might seem a straightforward investment today in just solar only, you also have a question of, well, what risk have I got at that 4 till 7? And also what risk have I got in that morning period? And what might storage do to help to mitigate some of those risks? And I think that is the one thing really for me that storage can bring to solar, to say to that FD, CFO, to say, actually, we've thought about this, we think this risk is coming, in fact, we know it's coming, and here's the solution. And so I think that's what I would try and bear in mind when you're looking at that sort of solar-only installation. Could you put storage on? Does that reduce the risk? Is it worth the investment? That's obviously side by side, but I think worth considering nonetheless.
So now I feel like I have to defend myself. I don't hate solar, I love solar. I've done gigawatts of solar on the funding side, debt and equity. I'm just trying to move forward and holistically, trying to find a solution to to take us through the energy transition. We all know what's happening. We're reducing base load. We're closing down coal. But what are we doing, or what have we done for the last 10, 15 years? Adding intermittent generation, i.e. renewable, which is great. That's what I want to go. But we didn't really think about what was going to happen to the grid. The grid was built 60, 70, 60 years ago or so to manage large, centralized generation. The big coal plants, the big CCGTs, so on and so forth. Fast forward 60 years, same grid, different generation. Decentralized, decarbonized, intermittent generation. How can we even think that something that was built 60 years ago can manage what we have put on the grid today? Storage is key to go with solar, is key to go with wind, to create that flexibility, to create that sense of base load that we're getting rid of.
Look, at the end of the day, where are we now? 20% of our electricity comes from renewables. I think by the end of next year it's going to be 30%, so the problem's only going to get worse. So yeah, massive opportunity, and that's why we want to be involved in projects, invest in projects. We certainly believe in it as an organisation. I personally believe in it. I think as we will do up here, very passionate about it. So yeah, I think there's been some excellent points made.
Ben Morris from Mazars. A question for you, Mark, once again. I'm curious as to how you really look at the downsides when making a debt investment, because I think that's something that I found personally difficult when looking at the numbers. It's just really hard to construct the downside cases.
It's a very good point, and yeah, you've got to try and use some industry figures and numbers that are coming out of people like KiWi, and also try and look at what we think is the most realistic of cases. So that's a number of different sensitised cases. Look at the debt serviceability over that period, and then look at what our downside would be in terms of flexing the term. And that's how we've got our guys' heads around it, because there is going to be some volatility. If you want certainty, it's just not there. We'd all love somebody to create a floor price, and maybe KiWi can. I don't know, maybe. Because obviously that is something that bankers and financiers can get their heads around. We look at it from the point of view of, well, okay, realistically, what is the worst case scenario? And then what does that do in terms of getting our money back?
Thank you very much, and yeah, I think all the panelists have been very, very candid with us, brought some good examples. They've been brilliant, so I'd like to thank them all. Thanks to our sponsors, obviously. Thanks to Terrapin for having us, and yeah, on to the next event, I guess. Thank you very much.